Hello traders, Greg here with a market update. Okay, so the big news that is moving markets so far this week is obviously what has been happening with DeepSeek and how DeepSeek has been disrupting the AI industry by making AI a lot cheaper. These guys have obviously made their AI with apparently only $10 million as opposed to tens of billions or hundreds of billions of dollars. With they did it in far less time and they did it with far less people. And the big deal is that the hardware they used was nowhere near as much as what the other AI companies have been using. So look, the biggest loser from this has obviously been NVIDIA, who produces the GPUs that have been sold to the AI company. So that's why we saw this huge sell-off in NVIDIA, obviously on Monday, where it was down 17%. We saw the biggest market cap loss in history of equity markets in one day, over $500 billion. So yes, big deal. But yes, NVIDIA did bounce back yesterday, took back almost half of those losses, up around about almost 9%. Look, we have been in a equity bull market, one of the best that we've ever seen. With obviously equity markets, up doing record highs all the time. Nasdaq has been leading the charge there, and also the company that has been doing the best and literally leading the charge as well has been NVIDIA. So when you're in a bull market, it's no surprise that the market is conditioned to buying dips, and that's obviously what they have done with NVIDIA. But is it all over? We're not going to see any more big losses for NVIDIA. I would suggest that is not the case. Look, NVIDIA, one of the reasons why it did grow exponentially and its share price obviously went up parabolic was because every single quarter when we had earnings, its earnings well outperformed expectations. Now with what's happening with DeepSeek, I would say with high confidence that there is going to be a lot less demand, obviously, for their GPUs, and we will see, probably some of the larger customers, cutting back or cancelling some of their orders, and also new customers, not ordering as much. So over time, when we do see the next earnings for NVIDIA, I would imagine it's not going to outperform like it has in the last 2 years. And potentially we might even get a profit warning from NVIDIA at some stage moving forward. And when we see that, obviously, we might get round 2 of the NVIDIA sell-off. So would I be chasing this NVIDIA rally at the moment? No, I think I'd suggest probably selling rallies on NVIDIA like we're seeing at the moment, maybe a touch higher, is probably the way forward. Okay, so moving along, today is actually a big day in markets. We've got a couple of big data prints coming up. Locally here in Australia, we've got CPI in Australia. Now, it's important for 2 reasons. One, it is quarterly CPI, so it only comes out once a quarter, 4 times a year. So this is the CPI number that the market really looks at and what the RBA really looks at. And it's also important too because we do have an RBA meeting next week. Where the market is obviously pricing in that there's a very good chance that the RBA will be cutting by 25 basis points. So this is the last chance for the market and the RBA, to either cement that rate cut or not. So what we're looking for on that CPI number is the market looks at the trimmed mean. So year on year, we're looking for that to go from 3.5 down to 3.2%, so lower. And quarter on quarter, looking for that to go down from 0.8% down to 0.6%. Okay, so look, it's not rocket science. If the number does come out slightly lower than expectations, so better than expectations, look, that's going to cement that rate cut, right? So the market will immediately, look at the RBA, cutting rates early next week. And obviously for local markets, they'll react to that. Imagine that Aussie will trade lower on the back of that, and Aussie has been in a world of hurt the last couple of months, so we probably will see that go back down towards 62 cents and lower, down towards those 5-year lows. But the Aussie share market will like that, so probably Aussie ASX will trade higher. If the market comes out around expectations, look, I don't think the market's going to move too much, and it's probably not going to change the outlook for the RBA, and that on balance, we probably will see that RBA rate cut next week. But if the number does come out above expectations, I'd say that the rate cut is off. And in that scenario, we'll probably see the Aussie, trade higher, back above 63 cents. That would be supportive for the Aussie, and ASX probably will not like that. So probably a softer ASX on the back of that. But anyway, look, certainly 11:30 Sydney time or Aussie time. Expect some volatility in local markets on the back of this important CPI number. Okay, so next thing on the agenda that is going to be market moving and is a big deal is it's the first FOMC, first Fed meeting for the year tonight. Now, last Fed meeting, we saw the Fed cut rates by 25 basis points, but it was a hawkish cut in that we also saw the dot plot released by the Fed, where the Fed members look forward to where they see rates in the following year, and the Fed only looked or was agreed for potentially only one rate cut for 2025. So market was expecting more, so that was a hawkish cut by the Fed. Now, this meeting tonight, market expectation is for a pause. So we're not expecting any rate cuts at all this meeting. Market will not move on that. So the market's going to move on whether or not it is a dovish pause or a hawkish pause. Now, look, a few things have been happening in the markets recently. One is that we did get a CPI number out recently in the US. Core CPI, after 4 months of being sticky at 3.3%, actually went marginally lower to 3.2%. So the Fed does have, some positive, even though it is tiny, traction on CPI that they may talk about. The other thing that is going on in the markets at the moment is obviously with Trump now being in office. He's been very clear recently that one of the things is he wants to get a lower crude price, and when he gets that, he said he immediately will demand a cut in interest rates. So Trump certainly wants rates lower. He wants a dovish Fed. So if Powell was actually hawkish tonight, I think it's going to be World War III between Trump and Powell. I'm not sure this early in the piece Powell is going to want to do that. So I think the Trump factor, even though central banks are supposed to be independent, I think on balance he's going to try not to be too hawkish. And the third reason is as that we're talking initially, is that we just did see one of the biggest, or the biggest sell-off in the equity markets, for a stock losing market cap in history. So we've had some market turmoil. If the Fed was hawkish, obviously that's not going to be good for markets. So we do have markets a little bit stressed at the moment. So I don't think that Powell is going to want to stress markets even more than what's happened early this week. So look, I think on balance, Powell is probably going to deliver a dovish pause in that we're probably going to hear him say that the Fed still has not reached its neutral rate on this easing cycle, so there is still scope for lower rates. So look, I think that's going to be supportive of markets. Obviously, equity markets are going to like that from Powell tonight. But for the US dollar, I think that obviously is going to be a negative. So we probably will see some US dollar selling tonight on the back of that outlook that I've just described. And the sort of the key currencies you might look at there is dollar yen. We just did have a rate hike by Japan on Friday, and they still have a bias to raise rates in the future. So that may be the standout dollar short tonight. So So yes, and when you're trading the Fed tonight, the focus is you've got to look at bond yields, right? So look to see what US 2-year yields and 10-year yields are doing. US 10-year yields at the moment have actually dropped a long way from their highs. I mean, the highs was they reached so far at the beginning of this year was at 4.8%. We're down around about that 4.5%. So if we see those US 10-year yields and 2-year yields around about that 4.2%, trade lower, then certainly that US dollar selling will eventuate, and that probably will be the trade of the day for the Fed tonight. So good luck with that, and we will check back in with you shortly.